Imagine you just scored $10 million in actual cash from something so illegal, it would make a cartel accountant blush. Cocaine bricks vacuum sealed inside spare tires, fentanyl pressed in a basement lab, ransomware payments from hospitals, arms shipments to a warlord, straight up government bribery, whatever. The money is sitting in rubber banded bricks hidden in cereal boxes, hollowed out car batteries, or the lining of a shipping container full of frozen fish. And now you have one massive problem. You can't just stroll into Wells Fargo with a hockey bag full of hundreds and say deposit please, because the second you try, the teller hits the silent alarm, the branch manager files a currency transaction report for anything over 10 grand, and if you structure it by breaking the cash into $9,000 bites across 50 branches, the federal structuring law slaps you with 5 years in prison, even if every dollar is legally earned. So the very first hurdle every single criminal on earth has to solve is called placement. How the hell do you get raw, stinking cash into the legitimate financial system without lighting up every surveillance system from Miami to Moscow? And the answers are terrifyingly simple, yet terrifyingly effective. First technique is classic smurfing. Hire 500 broke college kids, illegal immigrants, or desperate addicts. Pay each $200 to walk into 500 different bank branches on the exact same day and deposit $9,500 in cash each. Boom. 4.75 million placed in 24 hours, 0 CTRs triggered. Second technique is the legendary cash-intensive business play. You buy or create a laundromat. Yes, that's literally where the term money laundering comes from. A strip club, a nail salon, a car wash, a parking garage, a bar, a restaurant that barely has customers. You declare $2 million in revenue when real customers only spent 300 grand. The extra 1.7 million in dirty cash gets mixed in with the till receipts and becomes legitimate sales. The beauty is the IRS loves you because you're voluntarily paying tax on phantom income. You're literally paying the government to help you launder. Third technique is the casino wash. Walk into Vegas, Macau, or even a riverboat in Louisiana with $1 million cash. Buy chips, sit at the baccarat table for 3 hours betting minimums with perfect basic strategy, lose 4 or 5% on purpose, cash out the remaining chips, walk away with a nice clean casino check or wire transfer now documented as gambling winnings. Fourth and biggest of all is trade-based laundering, the $500 billion a year monster nobody wants to talk about because it's boring on paper, but unstoppable in practice. You own an import company in country A and an export company in country B. You ship 1,000 t-shirts that cost $5 each to make, but you write the commercial invoice for $500 each. You pay $500,000 for goods worth $5,000. The $495,000 overpayment is your dirty cash, moving cleanly across international borders disguised as normal trade. Customs officials don't open every container. Banks only look at the invoice. The United Nations says this single method alone launders $500 billion every year. Fifth is the ancient Hawala underground banking system that's been running since the Silk Road. No money physically moves. You hand 1 million cash to a Hawaladar in Dubai. He gives you a code word like Mango73. Your cousin in Toronto calls the Hawaladar there, says the code, collects 990,000 cash minus 1% fee, zero paper trail, runs entirely on family trust and the knowledge that betrayal means death, still moves hundreds of billions annually. Once the cash is finally inside the financial system, the game moves to phase 2, layering, the art of creating a blizzard of transactions so dense that no investigator on earth can follow the trail. You wire the money through 40 shell companies across 15 jurisdictions in 72 hours, Delaware to British Virgin Islands to Cayman to Seychelles to Panama to Ras Al Khaimah to Liechtenstein, back to Cyprus to Hong Kong to Singapore to Latvia to Estonia, and finally into a respectable private bank in London or Geneva. Every company has nominee directors who are homeless people or paid stooges, bearer shares, trusts inside trusts, inside foundations, inside foundations. By the time a prosecutor gets a court order for one entity, the money has already jumped 10 steps ahead. The 2020-2025 crypto version is even more insane. Send Bitcoin through 50 hops on Lightning. Swap to Monero for perfect privacy. Bridge to USDT on the Tron network. Run it through the latest mixer that replaced Tornado Cash after the sanctions. Convert back to Bitcoin. Send to a KYC exchange using a fake passport. Withdraw to a corporate account in Singapore. Even the NSA needs a year to untangle that. Real estate layering is elegant brutality. Buy a $50 million condo in Miami Beach or a Mayfair townhouse in London through an anonymous Delaware LLC owned by a Cook Islands trust whose protector is a Swiss lawyer who will die before he talks. 2 years later, sell it to another anonymous entity for $55 million. Your original dirty $50 million is now a documented real estate capital gain. Art is the king of layering. Buy a Basquiat or a Warhol for $80 million at Sotheby's or Christie's with dirty money wired from anywhere. The auction house only cares that the wire clears. Store it tax-free in a Geneva Freeport warehouse for 5 years. Sell privately to a Russian oligarch or a Chinese tycoon for $120 million. Now you have a $120 million art sale cleaner than a nun's habit. Finally. Phase 3. Integration. The money comes home to you as completely legitimate income, salary from your own consulting firm, dividends from your hedge fund, a loan from an offshore bank that will never be repaid, gambling winnings from a private poker game in Macau, inheritance from a fictitious uncle in Belize, revenue from your brand new film production company that somehow landed a Netflix deal. At this point, the FBI can kick down your door, and your white shoe lawyers hand over 10 years of audited financial statements, tax returns filed in 6 jurisdictions, and a receipts folder thicker than a phone book. The agents leave with nothing because on paper, you're cleaner than the Pope. This isn't theory. These are real cases. The Colombian cartels in the 80s and 90s used the black market peso exchange. A cartel in LA has 100 million cash. A Colombian importer needs dollars to buy electronics. A broker connects them. Cartel sells the cash at a 20% discount. Importer wires clean pesos from Bogota to the cartel's bank in Colombia. Cartel gets clean money at home. Importer gets cheap dollars. Broker takes 5%. No drugs cross the border. Wachovia Bank from 2004 to 2007 laundered $378 billion for Mexican cartels by accepting bulk cash deposits in Mexico and wiring it straight to U.S. correspondent accounts while filing zero suspicious activity reports. They paid a $160 million fine in 2010 and called it the cost of doing business. Danske Bank's tiny Estonian branch from 2007 to 2015 moved 220 billion euros of Russian, Azerbaijani, and Moldovan criminal money. Employees got champagne bonuses for hitting volume targets. The whistleblower was ignored for 3 years. The bank lost its license and paid a €2 billion fine. The Malaysian 1MDB scandal saw the Prime Minister and his crew steal $4.5 billion from a sovereign wealth fund. The money bought Hollywood movies, including The Wolf of Wall Street, a $600 million yacht, $200 million in art, and a $27 million pink diamond necklace for the wife. Goldman Sachs earned $600 million in fees helping issue the bonds, and later paid a $5 billion settlement while the lead banker fled to China. North Korean state hackers from 2021 to 2025 stole over $3 billion in cryptocurrency, ran it through 1,000 wallets, privacy coins, over-the-counter desks in Hong Kong, and fake trading companies in Southeast Asia before cashing out clean. The U.S. Treasury sanctioned wallet addresses, but the money was already gone. And the reason none of this ever stops is simple. The same governments that write the anti-money laundering laws are the ones who need dirty money flowing to keep property prices insane. Art galleries open, law firms fat, and entire economies like London, Dubai, Singapore, and Miami afloat. Delaware alone registers more anonymous companies than the rest of the planet combined. London sells golden visas to anyone with a few million questionable pounds. Switzerland still has numbered accounts. Dubai asks 0 questions and has more gold souks than traffic lights. Singapore is the new Switzerland for Asian oligarchs. Money laundering isn't a bug in the global financial system. It is the operating system. The cartels, dictators, corrupt politicians, and tax-dodging billionaires aren't fighting the system. They are the best players of the system, and the most insane part is that 99% of what I just described is completely legal under current laws. So the next time you see a 22-year-old crypto influencer buying a $30 million Bugatti paid in cash, or a dictator's son throwing a $100 million wedding in the Maldives, or a self-made tech billionaire who can't explain where the first $100 million came from, just smile, because now you know exactly how the washing machine works, and it never, ever stops spinning.